Morning everybody. So in today's video we're about to go over the weekly preparation process and get some thoughts out as far as what's to be expected. We do have a new month starting, so we're also going to talk about that. We're going to discuss seasonality, higher time frame view, intermarket relationships, and a contingency plan just in case our plans don't go according to plan. Alright, so without any more wasting time, let's jump right into the video. So the first thing we're about to do, or the first thing that we do as a whole, is of course check the economic calendar. We basically have NFP this week. So because that's the case, we have to operate in a particular fashion versus the normal mode of operations that we generally do. So with NFP or FOMC or CPI or any of those, rate announcements, things like that, they all have their own different characteristics. Like FOMC, for example, is a two-stage event, which we're not going to get into today. But generally, you want to make sure that you understand that the risk is elevated. Because that's the case, the way that I operate in NFP or FOMC or rate announcement type of day is, of course, I already have in my mind, I'm only taking one trade. Generally, I normally take one or two trades. And if I win, I stop. If I lose, I can only take one more. And then I have to drop my risk, right? So on and so forth. I do have a risk management video that you can go check out. It gives you like the process that I employ. Maybe you can apply that to your own trading. But yeah, so some of the rules that you want to have is, obviously, if you're new, you should probably just study because it's really reckless. And you may not want to hear that, but would you rather get the experience so then you can eventually engage properly? Or do you want to get steamrolled because you don't have the slightest idea what the hell you're doing and deal with pain and suffering more than you need to, right? So the choice is yours, obviously. But yeah, so one trade a day. The only trading days that you want to participate, especially again if you're new, is Mondays and Tuesdays. That's because obviously that's before the impact of the news event. Some people that are more experienced obviously can trade after NFP or any of these other news announcements, but again, you have to have experience and know what the hell you're doing. Otherwise, you open yourself up to unlimited risk, because if you are on the wrong side of an FOMC, NFP, rate announcement, so on and so forth type of environment or news event, your stop won't be respected. Okay? Just because you have a stop doesn't mean that the news that comes out, the reaction, doesn't mean that that's going to have to respect that. All right? So yeah, we can see how Monday and Tuesday has some news events, 6:45, 7 a.m. This is Pacific Standard Time. So we're going to want to look to possibly operate within those times. Okay, and then of course Wednesday to Friday has most of the NFP impact that's going to occur. So another thing is, when there's NFP that's occurring, you don't want to have a completely hardline bias because you don't know what it's going to do. Nobody does know, and if someone tells you they do know, they're full of shit. Okay? So definitely something to consider. All right, so because we have our news outlined already, now the second thing that you want to try to look at is, like I mentioned, seasonality. Okay, and for those that don't know, seasonality is pretty much just something that basically is a statistical reference of data based on what things generally do at certain given times of the year for particular assets. Let's pull up this seasonality chart from my mentorship. So we can see how May going into June is right up in here. Okay, so it looks a little bit congested, but overall it could have the potential to go higher, right? All three lines, when they're going in the same direction, is a good sign for a particular interest. Of course, this is not a be-all, end-all. You just use this as a reference point when you see all three lines pointed in a particular direction. For example, April going into May has a heavy bearish sentiment, which is why if you have been paying attention to ICT the last couple years, you sell in May, right? Sell in May and go away. So going into June, it's the summer months have now basically began, and sometimes the summer is a little bit more difficult, and sometimes it's consolidating, sometimes it's hard to read. So that's another thing you want to keep in mind. That's not to scare you away from anything or make you have this fearful thought. You just have to realize that it's a time of the year that's a little bit more difficult. Okay, but yeah, in terms of seasonality and keeping that fact in mind, we're going to go into the market and have that perspective and keep our risk manageable, especially because it's the NFP week. It's the start of the new month. So we're going to be cautious. Okay, so looks like there is a potential for bullishness. We'll see if that is going to be the case. While, of course, keeping in mind the fact that statistically, things could be difficult. So if it seems difficult, you know why. All right, so given the fact that we just seen this seasonal influence, let's see, is this the Dow? I think this is the Dow. See if I could pull up the DXY.
Now
So these are the bonds. Okay, so this is also important because this is going to be the first asset that we look at. So again, April, May, right? Bonds have the potential for bullishness from May to June, or sells in May, goes into June before we hit July, gives us a potential for a rally. So if the bonds go higher, for those of you that have been paying attention to my stuff and what ICT says and what he teaches, when bonds go higher, that means that yields will go lower, which leads to lower DXY and potential for bullishness in the indices. Again, it's the summer months, so that could be not as fruitful, and it might be a hard read. So you got to keep that in mind. But there is a potential for the bonds to go higher in June, and then going into obviously July. Somewhere in there, there's also a bearish tendency. So again, we use this as a reference to get a potential lay of the land before we do our overall analysis. Okay, so the S&P looks like it's potentially having the ability to go higher. The bonds have the potential based on this chart to go higher, which then leads us to understanding that the yields should go lower potentially, and then that would pull DXY lower if all things are in alignment. Okay, so now we got those pieces of the process out of the way. Let's move on to our first assets to dissect. We always start with the bonds and the yields. Okay, like we just talked about, the bonds have the ability to potentially have interest to go higher. How can we potentially justify that? Well, if we see this fair value gap, if we stay above this fair value gap, then we'll most likely see this continue to potentially go higher, maybe even come up to fill in the rest of this fair value gap. But before we get there, what's next to us? We have previous week's high, because it's a weekly chart. So this is a previous week's high here, and here, and here. So if price is going to bounce and go higher from this fair value gap, then it's going to attack those weekly highs. And then, of course, when we get to the daily chart, you'll see how many more other liquidity pools, if that is in fact the narrative, if it turns out to be the narrative, how many liquidity pools we have to attack on our way up to this higher time frame potential narrative. Okay, so another thing, you see this large wick. When you see wicks like this, you want to break them down into quadrants, so then you can get a feel for the different levels that you can also use as targets if we are in fact correct and we see this potentially go higher. Okay, so we also see this down candle, see this volume imbalance here, so that can also be possible support. We have a swing low here. So look, if it breaks through this fair value gap, breaks through this swing low and this volume imbalance, right? And then also gets down below this, then our bullish assumption potentially for the bonds would be thrown out the window, because when you're validating or invalidating things in terms of bias, you want to try to use, well, the most simple possible way, at least from my perspective, that's pretty effective, is obviously the 3 PDA rule, meaning 3 premium discount arrays or points of interest that get violated that would generally support us going, in this case, higher. If those break, then obviously it's a lot less likely that we're going to be correct if our assumption is bullishness. Okay, so with that being said, our invalidation points are this low, this fair value gap, the volume imbalance here, and then obviously if we get down below this low, all that stuff being broken for the weekly perspective, that's how we invalidate the weekly move. Okay, I believe if we go to the monthly chart, we can also see this as a order block here. We also have an inversion fair value gap. We also have a fair value gap here. So it's just another level to consider in terms of, possible support levels. And if price wants to break lower, if that is the case, if all these break, then obviously from this monthly time frame, this was obviously just a retracement to then attack potential lows, which there are pretty frothy lows down here if that is going to be the case eventually, if it shows that that's the case. But given what we talked about seasonality, given the fact that, given the fact what we see, what we're coming off of, we could have an argument for price to go higher. And then of course, we keep in mind our invalidation levels and the fact that it's NFP. So we don't want to hold on to anything too dramatically. And if another thing to point out is if you go from this low to that high, we're at equilibrium. So when we're on a higher time frame equilibrium area, generally that can lead to possible consolidation. And remember what I said about going into the summer months, how it could be a little more difficult, a little more tricky, a little less clean. Well, it's not ironic that from where we're at right now, or going into June, it's not ironic that we are in an equilibrium price level, which generally leads to things being a little more difficult. So if it is, you have your reasoning now as far as why, which assists you in knowing, okay, I need to slow down, not push too hard, and just let price speak. Okay, so, but my assumption is I want to potentially see us go and attack the highs, potentially attack these previous highs here, and then maybe eventually attack this fair value gap. And if that gets excited and smashes through that, then obviously we have trendline liquidity here that could also play a role. We also have trendline liquidity here for the yields as well, below price. Right? So that would justify this as a potential retracement to go lower. Also remember, I said seasonality showed that the yields or the bonds could potentially go higher. Well, the yields, if the yields follow the opposing view, which is what they generally do, these are reverse correlated assets. The bonds go opposed to the DXY interest, and the yields go basically, or the yields are basically lockstep generally with the narrative on the DXY, because basically the DXY follows the yields. So if this is bullish and this is bearish, that is a fundamental driver confirming that we could trust bearish DXY, and then of course in terms of risk on, risk off, that will lead to bullish indices. All right, so if that's the case, we basically have just, before even getting onto the indices chart and the DXY chart, we have basically determined a skeleton framework for potential interest based on seasonality, based on intermarket relationships / fundamental analysis, which that's what the interest rate market analysis is. I mean, it's basically given us a x-ray view as far as what could potentially occur before we do anything else. Okay, so that's my assumption. We have our invalidation levels there. And then again, we also have invalidation levels for this as well, right? It'd be the fair value gap, be this order block, and then obviously showing respect to this down candle, right? And then if price potentially pushes higher, we also have this inversion fair value gap here as well. So 3 PD arrays would be broken to the upside if those get pushed through. And then we would adjust, right? So I'm going to be under the assumption that we may see this try to attack this trend line liquidity. In turn, I'd like to see us respect this fair value gap and the levels that I've pointed out and show no respect to this up candle as it pushes its way up to the highs potentially, and then potentially to this fair value gap. But along the way, like I said, if you go now to the daily chart with that in mind, right, we have previous day's highs, right? Previous day's highs continuously up into the levels above us. So one thing you should notice is the potential for this to be a bearish breaker. Okay, so there's a low, high, broke down below. So this could potentially act as a bearish breaker. Again, this up candle, if you look at the weekly, is an order block. So that's something obviously to consider. Now, given the weekly validation levels and invalidation levels we pointed out, fair value gap, the low, the volume imbalance, inversion, fair value gap, here. Keeping those things in mind, when we drop down to the daily chart for the bonds, we could see how there's a possibility for this to be a bearish breaker. Okay, so we also have this fair value gap we want to watch. We have another fair value gap here that'll probably act as an inversion if we do go higher. And then we have an order block and a volume imbalance. So how price responds in this area here is going to give us clarity as far as what price should potentially look to do. Again, it's NFP week, so you don't demand anything on these kinds of weeks because you can absolutely be wrong. You could be wrong at any moment, at any given time as a day trader. But there's some things that you can use to confirm or negate as you read price delivery and the story that it presents us as traders. Okay, so we have a fair value gap here in alignment with what we have in terms of validation and invalidation on the weekly time frame. We also have potential validation and invalidation levels for here as well on the daily, that it could be in conjunction or oppose that weekly perspective. Okay, so we have this fair value gap. I'd like to see us stay above that. We have this breaker. I'd like to see us break through the midpoint of that and close. And then I'd like to also see this hold as support. I'd also like to see this hold as support and this as well. Okay, that all justifies the means to get above these highs here, which is also, like I said, equal highs now in alignment with what I said earlier with the possible fair value gap looking to be attacked if we do go in the bullish direction. Okay, so our invalidation from this level, right from this time frame in conjunction with the weekly that we looked at is obviously this fair value gap. If it shows respect to that, if it shows respect to this, and if it shows that it wants to smash through this, then obviously we'd have to fall in line with the potential for price to be bearish, especially if it breaks our weekly invalidation levels as well. But if it respects the things that we talked about on the weekly chart for this delivery here in terms of validation, if it uses this fair value gap, breaks through this, uses this as support, uses this as support, and all these supporting ideas fall in line with the potential for price to go higher towards these highs, we have other targets as well if that is the case. We have this high here, this high here. I think we got a little bit of a fair value gap in there as well, right? So that's all on our way to attacking this high if it is going to do that. And then so, price came down, swept liquidity, okay? And we came to a discount, and then again, if all these levels are supported or they show support, then obviously we can trust the fact that it's going to go higher, and then obviously that translates to this as well. If in line with our potential bearishness for the yields, right, we have this fair value gap here, we have an order block here we have to watch, we have an inversion fair value gap here, and then we also again have equal lows down here as the potential draw for the yields which would be in alignment with a potential for this to go higher, right? And that relationship, like I said, coincides with what the DXY and the indices should potentially do, given seasonality and the fundamental drivers, those being the interest rate markets and this analysis. Okay, so I hope that makes sense, and let's just pull up some of the stuff that I've had outlined. Okay, so we can move that aside. Like I said, there was a weekly fair value gap. I pointed that out earlier. We do have a monthly bullish order block. If we go to the monthly chart, like I pointed out. Right, but let's keep it simple and focus on the things that I basically just discussed, right, that I just shared with you guys. Okay, so definitely mark that off on your chart. Let's add in what we were just discussing, or what we just marked off. Got this fair value gap. Take that, we can move that to here. Okay. I like to color code all my stuff, by the way. So if it's like the daily, I put blue, or if it's the weekly, I put purple, right, or dark purple. And if it's monthly, I use bright pink, just to make it super obvious. You know, you can have your own taste and stuff like that, of course, but that's just how I do it. Right? So yeah, price does show respect to, or disrespect towards this, and then maybe it retraces higher into the order block and then dives lower. Our target on our way to the trendline liquidity that we pointed out, and these equal lows here in this fair value gap. Other targets would be this previous week's low, or previous day's low. Then we got this previous week's low. And then we got another previous week's low on the way to attacking the fair value gap and the equal lows. Okay, so invalidation, like I said, is this order block. We have an inversion fair value gap. Then, of course, if it just shows respect to this, then obviously that's part of the validation, invalidation levels as well. And then if we go to the 2-day chart, there's also this order block. So we don't want to see that respected. We want to see it sliced through. But again, if we see it start to respect, you know, it's all about paying attention to what price is speaking and being able to translate that and understand what it's doing, to then continue to trust in your validation, invalidation levels, and your bias. Okay, so I hope the idea makes sense. I hope the narrative makes sense to you guys as far as what potentially could be getting shown to us here about bias. So it looks like it's going to be bullish yields, it looks like it's going to be bullish bonds, which is this, and bearish yields potentially to get us down below the low and attack the trendline liquidity on its way to the equal lows here. And our validation and validation levels, I hope, are clear as well. Okay. All right, so now moving on to the DXY with that in mind. Okay, so let's just kind of note. So just want to make sure that we write that out so we don't forget so far. All right, so with all that being said, okay, that would justify us potentially trying to find reasoning to see the DXY go lower. Okay, so let me take off some of this stuff. So we're inside this order block. Okay, and again, if we go from low to high, just like how we were looking at the other market, how it was at an equilibrium point, we're kind of at an equilibrium point here as well for the DXY. All right, so let's look at the current range. Okay, so we're kind of at an order block. We're still at an equilibrium point, just like the the bonds, which we looked at a second ago. Okay, if we look at the weekly, all right, if we go from low to high, it's at equilibrium. Okay, so and price came back to a premium and then is now rejecting pretty hard. So assuming that this is going to hold here, when we come to the DXY and see what we see, we don't want to see this order block break. We want to see this inversion fair value gap continue to act as an inversion level. And yeah, so this should turn into an intermediate term high potentially, or a high that should be respected. Okay, so there's not much more to look at on that weekly chart. But keeping in mind what we were looking at, right, this order block, the inversion fair value gap, and some of the previous week's highs. Okay, we see how price ran up above the high here and now has rejected pretty aggressively. Now we got relative equal lows down below. Okay, right down here. So this is a monthly low from April. This is a monthly low from May. Okay, so we have two monthly lows that could be in the crosshairs for the coming weeks and days. You want to keep track of obviously the new week opening gaps because those act as dynamic support and resistance. I'm not going to mark off all of them. I do have this one because we're currently trading next to it, as well, and it overlaps with a couple of them actually. And there's a new week opening gap here as well. Looks like it was pretty much respected. And again, price ran up above the highs. Doesn't look like it has too much strength to go higher. The yields look like they're promoting us to possibly have this rejection and go lower. And we have contingency plan as far as whether it's going to respect that narrative or not. We'll be able to adjust. Okay. But I am favoring the fact that, you know, we could potentially see this go higher, this go lower, and then that translates obviously to the DXY potentially wanting to go lower, right? So what changes that for the DXY? Well, first of all, we got to see the yields and bonds obviously promote the opposing view, which would mean bullish DXY. But then we also want to start seeing the unwillingness to go lower and start seeing premium arrays get broken. Like if this high breaks, then I'm not going to be bearish for the DXY. So we have this order block here, we have this high, and then we also have this fair value gap here that could potentially act as either a resistance to go lower, which is what I'm favoring, or if it breaks above that, that gives us now our three PD arrays, the inversion fair value gap, the order block, and then potentially the breaker. I mean, not the breaker, the high here, which would then justify us getting up maybe above these highs. Right? But that's a contingency plan. That's not what I'm favoring this week. I'm favoring us continuing to try to maybe attack this previous week's low, then of course attack this previous week's low, or previous month's low, and previous week's low, I guess. And then of course on our way to potentially breaking through pretty much both of these levels here. So that's my assumption on DXY. Okay? Nice and simple, very quick, right? Not too many moving parts, not very confusing. There's just particular levels to set as validation or invalidation levels. And we got to wait because it's NFP. We're going into the week based on what we see from seasonality and the intermarket relationships. We have now come to a determination that we think this is going to be bearish, which should then obviously translate to us potentially being bullish for the indices. Okay, so let's open this up a little bit. It is a little bit messy here, but you're just gonna have to suck it up, buttercup. Okay, so we did have SMT at the highs here, which I pointed out to my private community. The yield, or the Dow and the other indices basically had a cracking correlation. Again, in order for us to trust that, we got to start seeing bearish these lower PD arrays start to get broken, and then the change in the intermarket relationship behavior that we just basically outlined for the bonds, the yields, and the DXY. All right, in order for us to confirm a bias for the indices to change, right? Otherwise, we've just been completely bullish and things just retraced. Okay. So what turns us bearish for the indices by just looking at the indices? First of all, of course, you have to use all those other things I talked about to be able to build trust, because that's the whole reason that those things are important and that this process is important. Everything has to be in alignment, right, and change. So aside from that, using just this chart, just looking at this chart, what invalidates us to potentially continue going higher? Well, we got to see the continued disrespect of this fair value gap and this fair value gap. We have another one here. So if all three of those break, I mean, technically that's 3 PD arrays. We do have this monthly order block here. So if we break through the midpoint of this order block and close below it with the next candle, that would be pretty significant. Okay, because we got a new monthly candle coming out today, right? So we got to see how that reacts, how that's going to respond. And again, it's NFP week, right? So assuming that this is going to continue being bullish, right? Obviously, the targets are going to be potentially this high and this high, potentially this high and this high, and then potentially these highs here. If, of course, it starts respecting this and starts, continuing to go in the bullish direction. We do have an SMT at these highs here, which is something to note. And again, we still have the SMT at the highs, the significant larger highs SMT as well. So with SMT, you got to verify using the DXY. So what the DXY does will determine which SMT, if there's two, will actually perform, right? If DXY is bullish, then bearish SMT is likely to work versus the other SMT that's present, right? If it's a bearish DXY, that means that the bullish SMT should reasonably be respected in the indices if there's SMT between the three. And I hope that makes sense. If you guys have any questions, let me know in the comments. And if you've been getting value from this video, definitely like, comment, and subscribe. Let me know any questions in the comments. And I appreciate your support. All you guys have supported me the last year. So thank you from the bottom of my heart. Thank you. But yeah, so in terms of the invalidation, like I said, this fair value gap has to be respected. If it's not, then that starts giving us red flags. The monthly order block midpoint should also look to be respected. If it doesn't, obviously that's leaning more towards invalidation as well. We have this order block as well. If we start smashing through that, we have this little, I'm assuming that this is a new week opening gap in here. Yeah, I'm assuming that will be one. You can't really tell, obviously, from... Yeah, it's a new week opening gap. So yeah, if it gets down below that as well, then obviously that starts being more invalidation sentiment too. Okay, but coming off the lows like it has, coming off these PD arrays in a discount or close to a discount, as it has, just coming off the low, that's pretty significant. Okay, and it's really similar to what we see in the yields. I mean the bonds, right? Which is opposed to the yields. The yields are in alignment generally with what the DXY is going to do. It dictates what the DXY is going to do. And the yields obviously do, or they dictate the opposing view for the indices in terms of intermarket relationships, right? So if the yields go lower, DXY should go lower and the indices should go higher. So in terms of that relationship, it looks like that could potentially be what we trust. So going into this new week, in this new month, given what we looked at so far, I'm assuming that's going to be the case. Bearish yield or bearish yields, bullish bonds, bearish DXY, bullish indices, all based on some factual information. And then we have our validation, invalidation levels, which again are three PD arrays below us, given this chart. And it's 3 PD arrays above us, which we've pointed out as well for the DXY. All right. So I hope that makes sense. Let's go to the daily time frame real fast. All right. So with all that we have said, looking at least the S&P currently, we have this inversion for value gap here. We have a little baby one right here. We have a volume imbalance to watch. Okay. And I guess you could look at this as a potential order block. It's kind of sloppy. I don't really like how that looks. But nonetheless, if price shows respect to this area, shows respect to this inversion fair value gap, which it should if it's going to go higher, it may pull back into it because there's this volume imbalance, to try that one more time to then maybe catapult higher. But yeah, right. Everything that we've discussed from the weekly, from what I can see here, is translating. And we also see these consecutive up candles. If we go to the 2-day, it's an order block. So if the midpoint of that is also disrespected, there's more confirmation for us to continue seeking these previous day's highs, and then eventually the previous week or the previous week's high. Okay, so we have the previous week's high there, previous week's low here. So inside this range, if price is to go higher, it's going to most likely attack the previous highs in terms of a draw on liquidity or a PD array. In this case, the high, the order block, so on and so forth, right? And then of course the opposing view is also true if it decides to respect that, right? If it respects this order block, it respects this fair value gap, and then just continues to press aggressively lower, then obviously if other things change in the other assets as well, we adjust, right? And again, in closing, it's NFP week. So again, the protocol is one trade a day. Main trading days should be Monday and Tuesday. Lower risk by half, right? Or at least lower your risk by a quarter than what you normally use, because it's just too risky, you know. And you could literally not trade any of these crazy news events that I've mentioned and still be able to have a very lucrative career, right? It's not about getting in the market so much as much as it's about making sure you know exactly what you're doing, how to manage your risk, and how to be a professional, what to avoid. All right. But yeah, so we have this order block here. We have this fair value gap here. This one's from the other time frame we looked at. So yeah, we don't want to see these be respected at all. We want to see this continued sentiment to go higher. And see what else. And we can also observe this here, right? This order block. It's a lot of choppy wildness in there. And again, it's a new week. It's a new week. It's a new month. We're at equilibrium on the bonds, right? So we want to make sure. I think we're in the same scenario here as well. If you go from high to low, it's at equilibrium for this as well, going into these summer months. So another reminder to keep these fundamental aspects of the current conditions and the current time of the year, keep them on the forefront of your mind as well as you press forward, as we observe how our analysis plays out throughout the week. I will be live Tuesday and I don't know about Tuesday, maybe maybe Tuesday, I'll let you know, and Thursday, or Wednesday and Thursday, as is generally the case. Okay, so yeah, with that being said, you guys, I hope you got value. Definitely like, comment, and subscribe. Share this with a friend that you think can use the things that we go over, and just could benefit from watching somebody that knows what they're doing. I do have a mentorship available as well, if that's something you're interested in. If not, that's cool. You're all part of the WMG family already. Just being a supporter of the YouTube channel and the Instagram, so on and so forth. So again, I appreciate your guys' time. Thanks for watching. And if you have questions, let me know. Other than that, I will see y'all on the next one.